Let's talk about something that is more appropriate. Should you roll futures? Now, this is the time of the month here at the Small Exchange where we look to roll our futures. It's April, so that means we're rolling from April to May, from J21 to K21. We're going to get into all of that in a second. But I wanted to first pose this question, Pete, because it's something that I get very often and honestly has quickly become similar to how people view options and whether or not they want to roll their long or short options trades. With futures here, I get these questions where it's like, I got a great one the other day where this guy was like, oh, I have this pairs trade on in interest rates. Do I want to roll it forward here, or do I just want to go through expiration and take the small profit or small loss in the trade? And the question becomes, should you roll your futures? For me, I often bounce back the question, like, do you want to stay in the trade, right? Like when you're thinking about on a week like this and you've got some small exchange futures, Pete, that end in J21, which is the April 2021 futures expiration, when you think about whether or not you want to roll those things forward, the question becomes like, do you want to stay in that trade, right?
And that, in a perfect world, that's all you want the question to be. Do I want the duration or do I want the, not duration, I'm sorry. Do I want the exposure or not? And it's really a binary decision. Do I want the story, my strategy, you walk through your mechanics there, which were so important that you just covered on Small's live stream on YouTube. It's really, that's with cash expiration. What do you lose? Are you put in a delivery queue? None of this. All you do is lose your exposure. Do you want to lose that exposure? And that's the question about rolling. Simple as that.
It really is, because with options, it becomes this thing of like, if I'm short a call option and it's really in the money, then I don't necessarily get a big credit to roll it out. And there's a lot of questions around options given
very different animal.
Long or short, defined, undefined risk. With futures, should you roll your futures from right now, April to May? It's really as simple as like, do you want to stay in this trade? And I'm always like, you have for this example, the guy was short the knob spread. And I was like, you got the knob spread on in April. He said, it's gone a little bit against me. And I just like bounced the thing back to like, do you want to take that small loss and move on to something else? That's totally fine. If so, then close the trade or let it expire.
Right.
If you want that exposure still, if you think that trade will turn around and you still like the trade, even though it went against you a little bit, then yes, you should roll the futures out. Now, Pete, let's quickly run through what we do when we do roll futures, because to enjoy exclusive capital efficiency, I just talked about on our YouTube channel, SFX, for instance, the most capitally efficient of the small exchange futures, requiring just 1.5 percentage points of the product size in margin. If you want that kind of efficiency relative to 50% across all stocks and ETFs, futures got to expire. It's just something you have to deal with here. Same as buying and selling options, right? Like, of course, you'd rather sell a call, get short exposure, and only have to post, 10 or 20% the leverage that you get with options trades, but they must expire to fulfill the names calling here of the futures contract, right? It's just that simple.
It is that simple. And I'm glad you spoke to capital efficiency. And what's interesting is when you roll that position forward, is there any additional capital requirement? No. When you roll that position, there is no. That capital requirement stays consistent. And I think that's one of the challenging pieces. You just have to understand with options that are in the money, you go from an option that has a certain capital requirement to having 100 shares of a stock that may have a dramatically different capital requirement. And that's part of your management that is important to understand. Here, that capital requirement, whether you close it, let it expire, or roll it forward, never goes higher. It obviously comes down if you take the position off, but it's very standard. And this is what we want to do, is just take this. If I want to continue my expression of opinion, my bias, I just want to move from J to where? Where am I moving, Franklin?
Well, so here are all of your letters for the 12 different months on this. Do we use the Roman calendar?
Not our fault. These letters are not our fault. We assume no responsibility for the randomness of F through Z.
And this was probably an interesting conversation among the people who created this system, which was like, okay, January, J, February, F, March, M, April, A. And then you get to May and you're like, that's the first problem. Well, I've already used M, so I'm kind of screwed, let alone June and July. We've got a handful of J's. Now, the futures people are probably looking at the people who invented these names for months, and they're like, hey, different letters for the different months. That would have been really nice. It would have made our jobs easier. There's 26 letters in the alphabet. There's only 12 months.
I believe there's, like the missing chromosome, there's 25 in the Beverlovian alphabet, but 26 for the rest of us. Yes.
Plenty of letters for the 12 different months here, but that isn't how the calendar is situated. No. So what they did is they chose a sequential process that avoids letters that look like ones or look like zeros. And so you have F, G, H, J, K down the line. All we're worried about today, when you're extending your duration here, it's expiration week at the smalls. They expire on Friday. It's Wednesday. We got plenty of time to roll. All you got to do, Pete, is if you're long SM75J1, you want to still be long SM75, you sell J1, you buy K1 there or 21 or whatever it looks like in your platform there. That's all you do. You just roll the thing out from, and I'm going to do this on the fly because I messed this up, April to May. And that's it. It's as simple as that. If you're long in J, you still want to be long. You sell J, you buy K. If you're short in J, you want to still be short. You buy back your J, and then you sell it out in K. It's that easy.
Absolutely. And a cash settled future is very simple. The small, one of the things we felt was this rolling in the world of traditional institutional futures. And this is not just me being overly zealous. Something in the traditional futures world expires every single day of the month. We wanted to take that in. And honestly, from my professional world, when I used to do spot FX versus futures arbitrage, we would forget one of those expirations because not only were they at different days, they were at different times of the day. And we would actually get put into the delivery cycle and have to buy our way out, which we would call on the trading desk the idiot tax. Jamal and I talked a little bit about that yesterday. Cash settled futures take away the idiot tax. All your position does is go away, and that is as simple as elegant as you want. And what you'd like is that opportunity to know when to do it, to be whatever product you're trading, to be the same time of the month. Yeah. And that's what we've built. That's so important. Removing one of the continuing barriers of uncertainty of like, why do I have to learn this? Here is it all in a simple nutshell. 1 day's worth of management, housekeeping, and you're done.
It's really like if you go to the grocery store like once per month, right? Like if you go to Costco and you get all of your groceries for the whole month, small exchange, it's just one time per month you roll from this being April from J21 to K21 and you move on with your life, as opposed to back in the olden days, you had to go to the person who has the cows to get the milk. You had to go to the person who has the corn.
You speak like you go to, you've never been in a Costco. I bet you. I've been down to your neck of the woods. You've never, that's where normal people go to buy sweatpants for $19, not ones with a little tag for $200. That's the plebiscite that I live in. That's where we go, not the poser site of Lululemon pants. So don't be
the Lululemon pants are extremely comfortable.
Oh, of course
I will not allow you to besmirch that brand one more time. And I've never been to a Costco, so I am not practicing what I preach here. But when it comes to trading, you really do want the Costco mentality. Get all your rolling done, one fell swoop here. Should you roll futures? That question is up to you. Do you want this trade on past this expiration here this week? If the answer is yes, then roll. If you don't, small exchange futures settle to cash. You can let them expire. You're not going to see any crazy big fee or physical asset showing up at your doorstep. It is really simple here at the small exchange. And hopefully the question of should you roll futures and how you roll futures, really simple as well.